It was a dramatic weekend of bombings, and it was a weekend filled with all the good stuff. Bombings, threats, press conferences, and lots of heightened tensions. But the truth is that when the futures actually opened last night, what we realized is that the futures actually opened below the trend line, or below what we called the war line. And that's really an indication that the markets are pretty much saying, despite what's going on in the Middle East, we don't believe that this is going to escalate. We don't believe that this is going to last very long. And the truth is that that gives us a license to go pretty much risk on. And that's exactly what the markets are doing. The markets are, as you can see, very much in risk on territory. So we're back in risk on territory, and I'm going to show you exactly why we're in risk on territory. And I'm going to show you exactly what changes I've made to my portfolio, because it's actually not full risk on territory. There's one thing in the way of going full risk on, but I do believe that you should be toning up the risk on indicator. So I'm going to show you what I did to my portfolio to tone up the risk and to go a little bit more risk on. And I'm going to show you why I did that. So if that sounds good to you, you know what to do. Subscribe to the channel. There's 1.165614 million subscribers. Let's get the show on the road, guys. What a crazy weekend. I'm sure you guys followed all the updates, all the threats, all the bombings, all the civilian casualties. Everything that happened this weekend was absolutely crazy. My heart goes out to the civilians on both sides who are caught up in this war. But the reality is that the market is telling us that, I mean, they're not too concerned about what's going on in the Middle East, and they think that probably the worst is over and that it's probably time to go risk on again. All the big threats of World War III and closing down the Strait of Hormuz and all those other things that we spoke about actually below. Now the market's pretty much telling you, no, it's time to go risk on. That's exactly, you need to listen to the markets. I'm going to show you why we're going to be going risk on. I'm going to show you what I did to my portfolio, and I did it literally on Saturday to my portfolio to go risk on. So that's what we're going to be talking about today. If it sounds good to you, I need you to do me a favor, obliterate the like button. I see like 1,000 people here and like 169 likes, which probably means that the other 27 people maybe don't like what I've been saying up until now. Anyway, I'm going to carry on with the alpha. I'm counting on you guys for likes. I'm going to carry on with the alpha. Let's talk about what actually happened. So we had a crazy weekend, but as I said, when the futures opened, remember I called this line the war line, the war indicator, and the reason why it's the war indicator, it's the price it's the oil price. And what we know is that if the oil price goes above this trend line, where it actually tapped as soon as the invasion actually happened, oil actually did tap this trend line. If oil goes above this trend line, then we know that the market's starting to get a little bit worried about what's going on in the Middle East. And as long as it stays below this trend line, I think it's a trend line that's been happening since 2022, since the 8th of March 2022. We've been in this downward trend. And so as long as we're in this downward trend, which by the way on Friday closed at about $74, it's now trading at about $72.39. So what the market's telling you is, look, as soon as the futures open, we got the sign that pretty much it's risk on season. And you can see exactly the same thing happened with Bitcoin. So if you look at Bitcoin, that's when the futures market opened last night. So Bitcoin was moving around the 104, 105 level. As soon as the futures market actually opened, you can see Bitcoin went back up. You can actually see it a lot better. Let me actually show it to you on the Bitcoin chart. And if you go into the 1 hour time frame, which is here, you can actually see that there's a distinct place in the market. See, it's just there when the futures actually opened, and then the market actually started to go up. And then, of course, as soon as that happened, all the other risk assets went up. I think the main risk asset that put in a little bit of a performance last night was actually Solana. It's back above 155. I'll show you why Solana is actually benefiting from this, why Solana is back up at 155. And that, of course, led all the altcoins. So you can see that led all the altcoins. All the altcoins are pretty much green. Very hard to find a red altcoin in this thing. XLR slightly red, Venom slightly red, but Venom had a very big day the day before. But basically, you can see the market's running on 2 or 3 narratives. Those are the narratives that are actually running. So that's what's happening in the market. Now, let's talk about why this is happening, or what actually happened. Remember when there was the heightened tensions and the potential of attack and everything else, the market priced in the worst. And the worst case scenario here would be, number one, fully fledged war. Number two, that the Iranians would close the Strait of Hormuz. And you'll remember, we spoke about that strait. 20 to 30% of all the world's oil actually flows through this one very narrow shipping lane. I made a whole story about that here. Actually, I made the story actually on Instagram. So it's on my Instagram over here. If you're not following me on Instagram, there is a link below to the real profile. It's at @CryptoManRan. There's a link below. Josh, is there a link below on the top line? Put on the top line so they can see to follow my Instagram. So I made a whole story about the Strait of Hormuz and why it's so important. But the long story short is that the Strait of Hormuz, 20 to 30% of all the oil in the world actually flows through that strait. And the biggest concerns were that Iran would actually close that, and that would block 20 to 30% of the world's oil from actually entering circulation. Now, when you take that and you add it onto Iran's oil capabilities being severely diminished by all the bombings and everything else that's going on, and that could have driven up the oil price quite a bit, but it didn't actually happen. In fact, oil is now much lower than it was than before the first invasion. What is that telling you? It's telling you that despite everything that happened this weekend, despite all the threats, despite all the bombings, despite all the promises, despite all the threats of elimination, and you can pretty much see them all here. You can see there was an Iranian military official warned that Israel would not be habitable soon. Iran tells the mediators that it's not actually open to negotiating about a ceasefire. There were bombings, there were hyperbolic missiles, there were so many different kinds of missiles. Netanyahu said, we're on the way to achieve our two main objectives, eliminating the nuclear threat and eliminating the missile threat. And you could basically hear everything that came along. Netanyahu says that Iran actually tried to assassinate President Trump. So they're trying to get the Americans into the war. Trump's pretty much putting up a brave face and saying, look, we're not involved and we're actually going to help negotiate peace. Israel and Iran should actually negotiate peace. I think it's all a farce. I think, to be honest, I think that Trump knows exactly what Israel's doing and he backs what Israel's doing, but he just doesn't want the US to get involved for now so that they can, if they need to, actually get involved later. That's pretty much what I think is happening. Anyway, regardless of that, I think that what we also realized with this attack was that Iran actually doesn't have very strong capabilities. So they don't have any nuclear capabilities. There are estimates that Iran has 2,000 missiles, and they're shooting them off at 70 to 100 missiles a day. And I think after that, pretty much their war chest pretty much gets very, very, very severely depleted. And so what the market's basically saying is, and there was one tweet which I think summarized it very well. I think it's this week over here. It says, Bitcoin unchanged at 105 tells you everything that you need to know about the outcome of this conflict. The straits probably won't get shut. Khomeini would be completely idiotic to do that. By the way, you can see over here that the probability of the Straits of Hormuz actually getting shut are back at 31%. What's the reason for this? Well, the reason for this is actually because one of the biggest trading partners to Iran is actually China. And threatening to close the Strait of Hormuz actually affects China, right? Which is one of Iran's biggest strategic partners, even more than the United States. Russia is the other major partner of Iran, also seems to be leaning the US's way and not backing Israel or Iran in this conflict. And so I think that the eventuality of Khomeini actually closing the Strait of Hormuz would almost be left until the very end of the war. And when he really, really, really has nowhere else to go. Now, I'm not discounting it completely because there's, I think, a saying that says something like, never discount or never write off the anger or what a wounded lion can do. So, when you have a lion and the lion is wounded and you make the lion desperate, then the lion will pretty much do anything to survive, right? And that's pretty much the same thing with Iran. But I don't think they're there now. And the odds are pretty much telling us the same things. The market's also telling us, look, regardless of what you think, this is going to be another one of those situations where we're going to end pretty quickly. Because as we said earlier, we said the Strait of Hormuz probably won't get shut. This will probably resolve itself in a matter of days, weeks, not months. The world has more than enough oil to cover this temporary deficit. And the sell-off in risk assets was a screaming fade, which is exactly what I said. I actually said, I think that the market's going to go down. And I actually told you guys on Friday to actually start buying. And then I went into frontrunners in the Discord group, and I basically posted a list of all the tokens that I'd actually buy. I actually try and pull up. Let me see if I can actually pull up that list for you guys so that you guys can also have a look at it. Can I see it here? Let's have a look here. Yes, you can actually see it here. And I'll actually take you to that, as they say, when the time is right. When the time is right, I'll take you to that section. yeah, so for now, it seems like this is going to be another one of those conflicts where the worst is over. And then there was another tweet which I actually saw, which actually worded, it says, the Iran situation looks like a textbook fear dislocation. And we're already seeing a material rebound in risk assets today, which means that there's a bullish week ahead. And I really agree with that. As I said to you guys on Friday, you get the situation in these geopolitical affairs where when the attack actually happens, the markets price in the worst. And then the markets actually start to rationalize and to reason, and they start to realize, well, hold on a second. Number one, Iran's capabilities have been severely diminished. Number two, not only have they been diminished, but they don't actually have enough arms and ammunition to actually continue fighting for very much longer. They've got maybe 2-3 weeks in the arsenal. Then there's a lot of intel. I've got some intel from Israel, and I think everyone's got, like other sources have also got a lot of intel. Israel's kind of expecting this to last 2 or 3 weeks. And so you kind of realize that in probably 2 to 3 weeks, maybe this won't be history, but it will definitely be something that falls much more into the peripheral, much more into the background, and much more top of mind. And remember that markets are actually forward-looking indicators, and they're looking way past whatever's happening right now. They're looking multiple steps ahead of that. And so really what markets are doing right now is they're going into risk on this week, right? And it's actually quite a big week if you think about the week that we got ahead. So markets are risk on, as you can see. But we've got a couple of like big indicators or big things that are actually happening this week. The first thing that we have happening this week is we have the FOMC meeting. So we have the Fed interest rate meeting. That's happening on Wednesday, right? So that's where Jerome Powell is expected to announce whether or not there's going to be a rate hike or rate reductions. And as the market is pricing in right now, 99%, I think it's 99%. Let's have a look. 99.8% that there's going to be no rate cuts in this thing. But it is the biggest, it is the quarterly FOMC, right? Because it's the June one, right? It's the second quarter FOMC, which means that there's going to be a dot plot. So there's going to be a dot plot. And the dot plot means that the Fed officials are basically going to come out and predict where they see the interest rates ending at the end of this year and everything else. Now, remember, if the June dot plot holds steady at this level, there should be 2 rate cuts this year. We want to see if they're going to indicate more than 2 rate cuts this year. I don't think they're going to indicate more, and I think if anything, it's going to get worse to 1. If we get worse to 1, then I think the markets may go slightly down this week, but I think the markets are pretty much going to shake this off, just like they've shaken off this whole thing. Then on top of the FOMC meeting, we also have a Japan interest rate meeting tomorrow. So the Japan Fed, basically the People's Bank of the Bank of Japan. Sorry, not the People's Bank of Japan. Sorry, just what color is the? Okay, so I've just replied to them. Sorry. So the Bank of Japan basically makes an interest rate decision tomorrow. Now, this one's quite tricky because remember, Japan's going through crazy inflation at the moment. And at the same time, there's no demand for their bonds. So ideally, what they should do to reduce the inflation and get more demand for their bonds is actually increase interest rates. But I don't think that they're actually going to increase interest rates. And if I look at the markets here, the market basically says that they're not going to increase interest rates, right? You can see that it's 0.5. The consensus is 0.5, which means that the market's not expecting a rate cut. Look, if we get a surprise rate cut, and it's happened before that we have had a surprise rate cut, the markets may panic a bit that the Japan cash and carry trade will start to reverse. But I don't think that that's actually going to happen. And by the way, that's happening tomorrow. The third thing that is actually happening this week is we have the Senate, which was voting on the Genius Act, which is a stablecoin act. It's like the final vote on the stablecoin act. So we need to look at all of those things that are happening this week. You got the war. Let's see what the war does. My feeling is around the war is that it does that in terms of intensity. Then you got FOMC. My feelings around FOMC is that not much will actually land up happening at FOMC. There's going to be no interest rate cut. However, I think the dot plot is what's going to screw us. And I think the dot plot's going to go from having 2 rate cuts this year to having 1 rate cut this year. And when we have the 2 rate cuts versus the 1 rate cut this year, that may spook the markets a little bit. And my thinking is that I don't think that the Bank of Japan actually reduces or increases rates tomorrow. So that's really how I see this week actually playing out. But for now, the markets are telling you, look, it's risk on mode. And specifically, if you're in the trenches or in the altcoins, it's pretty much risk on mode. It really is risk on mode. And as I say, it's risk on mode, but it's not full degen risk on mode. And when I say it's not full degen risk on mode, I think the time has come to change gears to be a little bit more risk tolerant. The market is showing amazing strength. Bitcoin showing amazing strength. The altcoins are showing amazing strength. And I think it's time to actually be taking a little bit more risks in the portfolio. But I'm not going all into full-blown, in inverted commas, alt season. I'm not calling for the Bitcoin dominance chart, which looks like this, to actually start coming down very steeply into risk on mode. So when it's full-blown risk on mode, then what you expect is the Bitcoin dominance to actually really start breaking down. I don't think that it's there yet. Where I think that this Bitcoin dominance is going to go, and when I think this Bitcoin dominance is going to go, I think that this Bitcoin dominance only breaks down when quantitative easing actually starts, right? Now, we're nowhere near quantitative easing, just for the record. Jerome Powell basically said, look, we're not going to go into quantitative easing until the interest rates have been severely reduced. And so we're nowhere near quantitative easing. But yet I do think that it's time to go risk on mode. But it's risk on mode with a little bit of a caveat, right? I read a tweet here, and I just want to show you this tweet over here. It's by Crypto McKenna. And he says, the market should now operate in post.com bubble framework. Majority of assets will never make new all-time highs, whilst the Mag 7 will emerge to be on the path to dominance over the next 10 to 20 years. Asset selection has never been so important. So the difference between a full-blown alt season and what we're getting right now is, in a full-blown alt season, there's a lot of liquidity. And because of the liquidity, pretty much everything lands up going up. We don't have that liquidity because we are, the FOMC and the Fed haven't yet started cutting rates, right? But I do believe that there are certain narratives that I don't think that you can discount at this stage of the game. And certainly the way that I'm trading my portfolio is that I'm not discounting, I'm not playing everything in the altcoins. I'm really choosing one or two narratives that I think are going to benefit if there's risk on. But if for any reason the market goes risk off, I'm still pretty safe. So whereas I'm going risk on mode, but I'm keeping it to the less risky risk on narratives, right? And if you ask me about the three narratives, which I'm pretty much playing between now and quantitative easing, or potentially the end of the summer, pretty much the three narratives that I'm playing are, number one, I'm playing the ETH narrative around specifically the Genius Act, what stable coins are going to do, DeFi actually exploding, etc. That's the first narrative that I'm actually playing. The second narrative is the one that I've been playing all along, which is Solana. But specifically now I'm shifting gears to play the Solana ETF approval narrative, which is Solana ETF summer plus staking and in-kind redemption, which is going to happen. Like the staking and the in-kind redemption is actually quite big. So staking is massive for all the staking protocols. In-kind redemption means less capital gains tax. If you want to redeem your tokens, you can basically get your money out of the ETF and not pay capital gains and actually basically just end up holding the Bitcoin. And so that is effectively the three narratives that I'm actually, the second narrative. And the third narrative that I'm actually playing is the Hyperliquid narrative, which is a club or a centralized limit order book on chain, which is basically perpetuals dexes that feel like perpetual sexes, right? So, this show on YouTube has got no chance because I've spoken, my first image was an image of a war. And then I'm talking about perpetual sexes. Like I got no chance in this YouTube, don't you think? Like there is zero chance that this YouTube video actually survives YouTube. But anyway, you know what? If it doesn't survive YouTube today, you can always catch it on my Instagram later. So yeah, you guys need to follow my Instagram. Let's see if everybody's starting to follow. I had 26,200 followers. Okay, you guys need to follow. You need to follow. There's a link below for the real one. There's a lot of fake accounts out there. So the three narratives that I'm actually looking at right now, I'm looking at ETH and specifically ETH around DeFi and a real DeFi summer, Sol around an ETF and specifically around a staking summer, and then Hyperliquid. That's the three narratives that I'm actually looking at. Now, when I say that it's time to actually go risk on in those three narratives, what I mean and what I've personally done is I've taken my portfolio and I've said, okay, I had positions in Solana. I think that the SOL narrative will actually, that the SOL betas will actually outperform Solana itself. So all I'm doing is I'm taking a very small percentage of my Solana, say 10, 20% of my Solana, and I'm just moving it into the safer Solana betas. Now, let me show you what I mean here, right? So I took money out of Solana on the weekend, and I mean, you can actually see it right here. So this is Front Runners. This is our group. Here. I mean, where's Friday? Let's look at Friday. See, I left them a voice note here, and I kind of said, look, I've deployed. I deployed into 𝗠𝗏, I deployed into 𝗥𝗏𝘀𝗏, and I deployed into 𝗕𝗘𝗏, right? You can actually see it. You can actually see it right over here in my birdie call section, and you can see that deployment came from my SOL bag. So I don't actually have cash anymore, right? So all I'm doing is moving from SOL, which is the safer bet, and I'm moving it into the slightly riskier beta plays on SOL. Now, look, Solana did go up 5.45%, but look at what 𝗕𝗘𝗏 actually did. Let's try and find 𝗕𝗘𝗏. It should have moved up a lot more than SOL. Let's actually have a look here. 𝗕𝗘𝗏. Josh, what do we need to do to get the 𝗕𝗘𝗏 price here? Yeah, okay, so it's up now the same, but it was actually up quite a bit more earlier today. And so what you can see is that when these tokens actually land up going up, then the betas are going to do a little bit better than the actual tokens themselves, right? And so I'm not telling you to go into the trenches. I'm not telling you to start to go like crazy. I'm saying to you, pick your narratives. My three narratives right now: SOL, ETF with staking, ETH, DeFi, summer, and Hyperliquid. And so that's what I'm doing. I'm taking money out of my ETH bags. I've got very small ETH bags, but I'm taking money out of my ETH bags and I'm putting it into ETH, DeFi, summer picks. So this is a spreadsheet that one of the researchers actually made for me. I asked him, I said to him, how would you allocate them? And he said, look, Athena, Sky, that basically touches your ETH narrative. 𝗦𝗶𝘴 also touches the ETH narrative. 𝗕𝗟𝗡 touches across the DeFi narrative. And then 𝗥𝗏𝘀𝗀, very good one. 𝗥𝗏𝘀𝗀, why? Because you're going from ETH into base, and then and there's a lot of and also into DEXs, which is very big. And so I'm not saying to go crazy and start going all in on risk. I'm saying pick your narrative and then just rotate slightly from your SOL bags into the. Don't go. This is not money you're putting in the trenches. This is money that you're keeping in the same risk narrative, the same risk profile. So you say, I'm taking from my SOL bags and I'm going slightly down the risk curve, and I'm going into 𝗕𝗘𝗏, I'm going into Raydium, I'm going into Camino, I'm going into those guys, or I'm going out of my ETH bags, I'm going into 𝗦𝗏𝘀𝗀, I'm going into Sky, which is the old maker. I'm going into 𝗥𝗏𝘀𝗀. And I'm selling my SOL, a little bit of my SOL, and I'm going into Jupiter, maybe even 𝗏𝗏𝘀. 𝗏𝗏𝘀 is like the super app for yield optimization and for liquidity optimization. That's pretty much what I'm doing. So it's not full on risk alt season yet, but it does feel a little bit more comfortable to go slightly out of the main chains and actually go slightly down the risk curve. That's how I'm playing this. On top of that, I said to you that there's another narrative which I'm actually playing right now, and you know that I've been big into Hyperliquid. If you look at Hyperliquid, I mean, I think it's at an all-time high again today. Here we go. So it's at an all-time high, or just under all-time high, $44.50. So Hyperliquid doing really, really, really well. The reason why it's doing well is because, as you can see, it's really growing when it comes to perpetuals. So if you look at Binance perpetuals versus Hyperliquid, you can see the only real DEX, or the only real perpetuals DEX, which is making any type of headway against the centralized exchanges, is actually Hyperliquid. For those of you who don't know, and I'm sure most people know, but Hyperliquid is a chain, and the main application on the chain is this amazing perpetuals DEX, which feels like a centralized exchange on the DEX. Now, the reason why I'm talking to you about this is because now that everyone sees the market share that Hyperliquid is actually taking, everybody is trying to get in on the action. And so you're getting this whole narrative of like a whole lot of different perpetuals exchanges, which are starting to be launched by a whole lot of different players to try and capitalize or to try and capture some of Hyperliquid's market share. And the latest entrant into that is actually Bybit. So Ben came out this morning and he said, they're launching a thing called Buy Real. our first on-chain DEX incubated by Bybit will launch live by the end of the month, starting from scratch, and it will be born on the Solana chain. One, DEX and SEX synergy. Bybit isn't just another DEX. It's combining centralized exchange liquidity with DeFi native transparency. This is what hybrid finance feels like. Future SEX and DEX project coming soon. Unified liquidity and speed. So in other words, you'll be trading on the liquidity of Bybit, but you will keep the money in your wallet and you'll have DEX type transparency. And so basically they're building this on Solana, that could be why Solana actually outperformed ETH in this pump this morning. So if you look at the Sol ETH chart, I think that this is the chart that best shows it. It's this chart over here. So you see that on the Sol ETH chart, we had the pump on the daily. So I'll just go to the daily. You can see you had the pump here on the daily. I think this was because Bybit actually made an announcement that they are launching their project on Solana. And yeah, they said it's official. ByReal is here, incubated by Bybit, official, born on Solana. ByReal is the new on-chain liquidity network for the new wave of assets. And the reason why I think Solana got the pump is because this is a clear signal to the market that if you want speed, and if you want transparency, and if you want latency, and you want users, probably the best place to go is actually to go to Solana. And so now you've got Bybit putting their hat in the ring, and their hat in the ring is actually on Solana. So that's the Bybit Perpetuals DEX, the decentralized version of Bybit is being built by Bybit. They didn't do it on their own chain. They didn't do it on ETH. They didn't do it on ETH sidechain. They actually chose Solana. And that just strengthens Solana's apps. You can kind of clearly see that anybody that's building amazing apps is pretty much going on Solana. So you got Pump.Fun. By the way, Pump.Fun is listing. And you see now the Evo pre-market perpetuals are saying that it's somewhere between 550 and 680. It's still not right because it's still these perpetuals markets actually launched today only. So I would wait a little bit, but this will give you a good indicator of where Pump.Fun will actually launch. Pump.Fun's probably launching in about a week. So I reckon in about a week to a week and a half, Pump.Fun's actually launching, and we'll see what the valuation is. I think that'll do a lot for Sol. Remember, I'm very proud to hang my hat up on my thesis to say I think it's actually very good for Sol. I don't think it's extractive for Sol. A lot of other people have come out and said Pump.Fun is very extractive for Sol. I don't think so. I think that this is actually going to be very good. So Bybit coming into the ring. They are launching on Sol. I think that's very, very, very good for Sol. The reason obviously why they're going for it is because you can see the DEX to SEX spot trading volume is up. And remember that last week, Coinbase also made announcements that they're going to integrate DEXs into their centralized exchange app. Binance is in the ring as well. They've got this DEX, and now Bybit is coming out with ByReal. And so basically, the centralized exchanges are telling you that everything's moving on chain, which is why one of my top 3 picks that I actually landed up buying was, which I showed you guys in Frontrunner, was actually to go into Aerodrome. So I literally went into Aerodrome as well. And why did I do that? I kind of said, look, Coinbase is now opening the door for these DEXs. And if I remember, it only went up to 62 cents. And I was like, hold on, this must have more upside. Let's just actually see where that is right now. Probably 70 cents or 80 cents. Okay, so wow, actually insane returns. That's 33% returns. Not bad in a market like this. If you followed that trade. Well done to the guys in Frontrunners who actually followed that trade. Yeah, so I think that's pretty much where everyone's going. I think, so this whole, you're going to hear this word a lot, CLOB, which is just a fancy way of saying centralized limit order book exchange, which basically means that it looks and feels like a centralized exchange where you can see the buyers and the sellers. And that's a big narrative that's actually going to happen. Now, how is this narrative actually going to play out? I think that there's going to be a lot of DEXs trying to steal Hyperliquid's market share. I think probably none of them are going to be successful because Hyperliquid's already got amazing network effects. There probably will be one challenger coming up, and your idea is to try and bet on who the challenger is. Alex made a show this weekend. I think he made it on what's called Z Exchange. Is that how you call it? It's this show over here. I'll show you where it is, so you can go watch it if you want to watch it. It was actually quite a good show. Very good show. He brings a lot of alpha in his shows. You should actually watch those shows. It is not yet. It's in the video section. He does pre-records. Grow some balls, bro. Do some lives. Where is it? Yeah, videos, yeah? Which page? Oh, you mean go to 𝗙𝗘𝗏𝗏 all? And just scroll to the bottom. Click on 𝗙𝗏𝗏. Oh, okay, of course, I'm not on the channel. Okay. Blunt moment. Okay, not how to say blunt moment. That's like, yeah, this is the next big DEX is still under the radar. So this is Alex's his video. You should go check it out. Yeah. All right, there's one other big piece of news today, which I think is worth paying attention to. I actually just want to check the charts. Let's quickly just check the charts here. TRON. How's Tron doing today? Bang, Tron had a bit of a spike. Wait, this is not Tron. It is Tron. TRX, okay. TRX, sorry. I was about to say Tron is not Tron's not trading at 2,900. Okay, there we go. You see there's a big volume spike and there was a big green candle and the big green candle came down. The reason why that's happening, believe it or not, is because the Tron aims to go public and form a MicroStrategy type company with Eric Trump, believe it or not. So this launched just before the show. And I read the article from Financial Times. Crypto group Tron to go public after US pauses a probe into the billionaire founder. So Justin Sun, was being investigated by the SEC. Anyway, the SEC dropped their thing, and now he is going to public, and apparently with Eric Trump, and they're going to be creating this vehicle under this SRM Entertainment. Here's SRM Entertainment. You can see that SRM Entertainment's actually gone up 250% today. So they're doing a reverse listing into this entity, and they're going to be doing a MicroStrategy. The new venture will buy and hold the Tron token, mimicking the strategy of MicroStrategy, believe it or not. Josh, would you invest in the MicroStrategy of Tron? You wouldn't, eh? Hardest, would you invest in the MicroStrategy of Tron? Even if Eric Trump is involved, would you do it? No, you wouldn't do it. Yeah, I'm not sure that I would do it either, to be honest. But the interesting thing is, as you can see, Tron injects $210 million of their token into the new asset, which just means that they're basically leveraging up their assets. They're putting in $210 million worth of tokens, and that's immediately going to spike the value of their equity in this entity to like $500 million, and they're going to double it. Someone says, bro, what has Eric Trump actually done in his whole life? Yeah, I'm not going to comment. I can't get in the bad books of the Trumps, bro. Okay, a couple more things. I see Bitcoin's going up now. Very nice. 107, 162. Risk on, people. Risk on. Let's just go risk on. Mark is telling you to go risk on. Go risk on. Don't argue. Our 𝗕𝗏𝗀 account, how's that doing? Okay, we're $831 down. Remember, on the 10th of July, one lucky winner will actually take home this account. Also, remember, Bybit have now launched. We spoke about Bybit earlier. Not only have they launched the DEX, but they actually now have launched. I don't want to play the music here because this music is going to give me a copyright strike. But you can actually now on Bybit, you can trade all your favorite stocks. You can trade gold. You can trade indices and commodities on the app. So, guys, it's only on the app. It's not on the desktop. The desktop version is only going to be ready in Q3. So for now, it's only on the app. If you want to try it and you want to get the best sign-up bonus in the world on Binance, on Bybit, because Binance don't do this. Only Bybit do this. Then just go here. Bonus in the world on Binance. So just go here. Go here. There is a link here to open a Bybit account. Use the Bybit account. You get 50% discount on all your stocks trading if you sign up over there. And then 𝗏𝗏𝗏, remember, if you open that account. And then lastly, I did speak to you guys about this last week, and a couple of you did help me. But remember that I'm looking for people who want to join our Intro to Crypto course. This is for people who really don't know much about what Bitcoin is, what ETH is, what a smart contract is, what alts are, what exchanges are, what wallets are, how to keep yourself safe. For real beginners, if you know anybody who's a real beginner, do me a favor. This is like we're running a free course. It's a one-on-one course, it's an in-person course. There's a link here. Sign up over here. Otherwise, I'll see you guys again tomorrow. Hopefully things don't escalate more. Hopefully the market carries on running. Let's just see where we're at. It's quite nice to look at the prices when they're going up. When they're going down, you spend more time with your family. When they're going up, you don't have time for that. Yeah, so doing pretty well, 107. All right, I'll see you guys again tomorrow. Until then, trade well, my friends.